Thank you everyone for joining us. It's for the Tokenization in the United States webinar here at DigiShares. We're joined by a great panel of speakers, starting with Ryan Zega, Head of Structured Finance over at Aptos Labs, Laura, an attorney as well at the law office of Laura, Oscar Brito from MetroSpace. Very excited to learn about prop tech and real estate tokenization there, and Randy Goldberg from Land Invest, also in real estate development. So without further ado, we'll get started here, but I want to pass it over for opening remarks over to CEO and co-founder of DigiShares, Claus Skaaning. Claus, take it away.
Thank you very much, Jason. Thanks for taking the host role here for, I don't know, the seventh or eighth time. Thanks. You do a great job every time. Thanks also to the speakers. We have an exciting program, a couple of clients speaking about the projects. Aptos, a new chain that we're working on integrating and running on, and security token market. As always, a pleasure to have you here. So DigiShares, of course, we are a software company, a pure tech provider. We provide a white label tokenization platform for real estate or for any kind of RWA. We've been at it for 7 years, and we have more than 200 clients now running our platform globally. We have 3 versions of the platform. One is the light version that we call Launch, which is, I think, the most affordable solution pretty much in the industry, where you can get started for $3,000, tokenize your assets and get started, get off the ground. Then you can upgrade to a full white label called Standard, and there's an advanced version also which has API access for full integration and full customization. Launch, the light version, is extremely popular. We've signed, I think, more than 10 clients just over the past few months. So I think it gives you a lot of functionality for a very low price, and you can sort of use it for a POC or getting started, getting off the ground, getting traction. The platform itself is an end-to-end solution for investor management and for token management. You can mint tokens, sell tokens, you can pay dividends, distributions, you can trade, you can do everything in fiat and crypto, and you can customize everything as you wish to a great degree. We have clients that have completely replaced the user interface on top of the system through our APIs. There's also minimal customization that can be used to get started very fast. But in general, the solution supports many integrations and configurations for pretty much any scenario. We also run real estate.exchange in the US together with Texas Capital. We are still working hard on getting the first assets listed. So let us know if you have a real estate asset that you would want listed on or traded on a secondary exchange. We can make that happen at quite an affordable price. We are, as some may know, a US company, US incorporated company, headquarters in Miami. Most of our clients are in the US. We view the US as the best jurisdiction globally, actually, to tokenize. It's affordable, it's routine, recognized and understood by the legal firms how to set it up, and it's low risk, I would say, compared to many other places. We also are planning many events in the US this year. We'll be at least 6 or 7 conferences, both doing a masterclass, a physical masterclass, and also having a booth at the conference. So you'll be seeing us in many places. On the development side, we are working on supporting the new protocol, the new standard for tokenization called ERC 7943, which is backed by a group of, I think, more than 30 companies by now in the tokenization industry, including several of our direct competitors. So it's an independent, free and open standard that anyone can use, and it's not controlled by a single vendor. So you will not be locked into any specific vendor ecosystem if you use it. So I think it will become the dominating standard. At least that's what we are hoping for. We're also working on a new protocol for asset-backed tokens. So tokens that are not securities, but tokens that are backed by gold or diamonds or any kind of commodity. There's a new functionality in the platform. as a final remark, we will be hosting another event on December 17, focused on DigiShares, speaking about our solutions, our plans, and so on. And next week will be at the Abu Dhabi FinTech Week. So if some here are going there as well, let us know so we can meet. With that being said, I'll give the word back to Jason. Everyone, thank you for coming and have a great couple of hours.
Fantastic. Thank you, Klaus. Was actually just at a DigiShares event last month, or not even a month ago, for the Futurist Conference down here in Miami nearby, which is always a good time, right? And exciting always to see the great clients that use DigiShares already in production, which is also very exciting. So with that, excited to see these others projects and members in the ecosystem that are also involved. We need to dive in a little deeper, but high level, the U.S. has really seen tokenization grow a lot this year, especially with the Genius Act passing for stablecoins. That really served as a catalyst in the space, I would say, and that we can only expect even more in the year to come here. But with that, I know each of the people here joining us is building in the space, whether it's real estate, whether it's a blockchain that supports these assets or other. And so I would love to jump in. And the way we'll have it today, as mentioned previously, for anyone new that just joined us, we'll have each speaker kind of give a quick presentation or chat they would like to share. Feel free again to shoot in your questions into the Q&A box. And then depending on time, we'll either address them right away or save them for a panel discussion, which we'll have after each speaker has had their chance to present. So with that, I'll pass it over to our first person, Ryan Zega from Aptos Labs. So why don't you introduce yourself and go ahead and take the stage.
Yeah, definitely. So, let me see if I could share my screen and just run through a couple of quick slides. Here we go. Okay, perfect. Is the screen coming up?
Yep, you can see it
Yep.
clearly.
All right, great. Yeah, no, Klaus, thank you again for having me. Always a pleasure to join you and your team. And then, we're very excited about the, ongoing partnership, right? We're kind of in the middle of our integration and then look forward to having Aptos as an integrated chain within the DigiShares ecosystem. My name's Ryan Zega. I head up the institutional business development efforts at Aptos. Aptos is a institutional grade layer one that's focused on a wide variety of use cases. I'll kind of hop into my own background and then, discuss, Aptos a bit more, in a bit more detail. I joined Aptos about 6 months ago. So relatively new hire to the team, but I've been in the digital asset space for about 5.5 years at this point. So prior to joining Aptos, I worked for a broker dealer called T0. So our focus there was tokenizing private securities, so real estate assets, funds, private companies, and then allowing them to trade in a regulated manner. So we owned an alternative trading system. We had a private placement agent business to raise capital. And we even received one of two special purpose broker dealers that allowed us to be a custodian for securities issued on chain. Prior to my time at T0, I had a very TradFi background. So I worked for a couple of institutional commercial real estate firms in an acquisitions, asset management, and debt origination capacity. So on to Aptos, right? So as I noted, right, Aptos is a leading layer one blockchain. We initially were Meta's solution for, payment rails, right, between, their existing users. So that project was called the Libra DM project. And then, for a variety of reasons, it was sort of moved out of Meta. And then the co-head of that project, Avery Ching, became the, head of Aptos, right? So we raised a bunch of third-party capital, went mainnet in October of 2022, and then over the past 3 years have been building out our ecosystem. So we, like to kind of focus on a number of class-leading attributes: high transactions per second, extremely low latency, and extremely low costs are the three things that really define Aptos as a layer one blockchain. We're headquartered in Palo Alto, and then I am based in our New York City office. And then we have a global presence, right? A number of people in the APAC region, Europe, Latin America, and then we do a ton in the African continent as well. This kind of goes over some of the attributes of Aptos relative to other sort of competing protocols and sort of, monetary systems. And then really when we look at our, own layer one, right, we're focused on three main areas. The first is money movement. So we transact roughly $50 billion of stablecoin volume in a given month. All the major sort of stablecoins are issued natively on Aptos. The second focus, which is my, real focus, right, is putting assets on chain. So, that's where, we work with a number of RWA issuers and platforms like DigiShares to bring products on chain. And then the final category is what we refer to as data transformation. So we see the world coming on chain. So we'll incubate certain projects and again, work with best in class partners to bring that data, on the blockchain. Finally, just wanted to highlight a couple of the RWA partnerships that we have. We work with a number of institutions, including BlackRock, Franklin Templeton, and Apollo, to bring, different money market funds, private credit funds, and other debt and equity products onto Aptos. And then, kind of the key part of those relationships is also having, partners like DigiShares, Securitize, and others that, are facilitating that transition from an off-chain environment to one that's more on-chain. And this final slide kind of details a number of our other, partners that are present. And then, certainly look forward to, our panel discussion where we'll go into more detail on some of the products that we're seeing from tokenized public equity, right, to private securities, and then more traditional sort of tokenized money market funds and other, private fund products. And that's it for me. And then, love to turn the mic over to Jason for the next speaker.
Sounds good. Although we do have a quick question for you from Karan. Thanks, Ryan. How can we work with Aptos for our RWA assets and private markets to bring them on Aptos? Is it
Yeah.
maybe it's simple if you want to shoot them? Well, yeah, I'll let you take that.
Yeah, definitely. Yeah, we could connect offline, but there's a number of ways that we could work together, similar to DigiShares, right? We have a number of integrated partners that are looking to build on Aptos. So, we offer different grant programs, right, for groups that are looking to build, and then can also work very closely, with other integrated partners to kind of redirect you. So I'll shoot you, my Telegram and email, and then we'll take it from there.
Fantastic. Thank you very much. Awesome. Well, we'll be moving on to the next panelist here. Let's go with Oscar Brito, CEO of MetroSpace. You're on mute, Oscar.
There we go.
There we go.
Thank you, Jason, for the introduction. And I do want to thank DigiShares as well, especially Claus and the team for inviting me on this webinar, getting a chance to discuss my project a little bit. And I want to give some kudos to DigiShares. They're providing the back-end solution to our site, and they've done an amazing job throughout, from integration. And now that we've launched about a week ago, it's flowed perfectly. So let me try to share my screen. I don't have a presentation like Ryan, but I do want to share a little bit on the on our website, just you guys, so you can take a look at what we've done here. Why we think we have something a little bit different in the market as far as real estate tokenization. So 1 quick second. Okay, so my background is branded real estate projects focused in hotels and luxury residences. So when we came out into the market, so there were quite a few great options out there for tokenized projects, mostly in the multifamily sector, and just more traditional real estate like single family homes and that sort of thing. What we've wanted to do was put something more, something special on the blockchain, and we came up with Travaglio. So the idea is to sort of blend my real estate branded real estate, luxury hotel experience and onto the blockchain. So we put together Travaglio. We launched it as a tokenized, curated, branded hospitality project platform. We don't, we do our own projects because we are developers. So we tokenize projects that we feel comfortable with, projects that we know we can make good money on. Making money in real estate, as some of our webinar partners know, is not just a matter of buying a site, developing and selling it. There's lots of ways to actually make money, and the corners that you find in real estate are not always visible on how to make money. So our idea was to bring the crowd access to this branded experience. Aruba is our first launch. It's a 27 luxury residence project in the island of Aruba. It's branded by the U Group, U out of the UK. They've grown incredibly well in the last few years. They have, I think it's 40 projects in over 30 countries. And what we've done is we tokenized a fund to invest in a series of properties across the U network or the U ecosystem. We're going to be anchored by the U Aruba as co-developers, but we'll also be investing in other projects that U owns in Lisbon, that's also a project that's being built. But we're going to be mixing it with some projects that are already built, so we can bring in some quick, let's say, so we can bring cash flow into our investors network. DigiShares, by the way, has a great solution. They allow us via tokens to pay dividends on a monthly basis. And this was something that was very important for us because we wanted to not just provide a long-term, a high IRR, but we wanted to bring some cash flow immediately to our investors as soon as we start buying some of these already stabilized projects. So, I think what we have here a little bit different is we're not a platform for everyone to do everything. We're very specialized in the branded luxury experience. We're very specialized in projects that we know well, whether it's because we are the actual developers or because we're partnering with people that we know well. The solution that DigiShares brought us is amazing. We have a call to action button that just goes straight into the data room. People can download brochures, everything else, register online, which the DigiShares put a seamless solution with some sub. So it's automatic KYC, AML verification. And also it goes straight into an accredited investor verification process. And once all that's done, they're able to buy our token right from the site. They can pay via wire transfer. They can pay via. DigiShares also facilitated a integration with Stripe, so we can pay via ACH or debit card as well. And lastly, we can pay via tokens, obviously, which is what's actually the easiest way to do. We accept via DigiShares, we accept stablecoin payments, and immediately we issue the tokens, which we can host for them. We host a token for them, or they have their wallet. They can also have it on their wallet. So again, this is what I think. This is what we're doing, and I think it's a little bit different than what's out there right now. We're curated. We're focused on brands. You is the first project that we came out with, but we're going to be talking to we're already talking to other major brands that can't really mention right now, but you would all recognize. And as a background, which should have been the place where I should have started a little bit, I'm one of the two co-founders of the London Bulgari Hotel. So we were one of the first ones to see how much value added these branded deals bring. When you buy the site and even the construction, they're all based on traditional real estate developments, whether they're hotels or high-end residences, but branded projects really give an extra kick in the IRR. I mean, you see increased ADRs in about in the range of 30-35%, with a an minimal incremental investment on the decoration and the FF&E. And it's kind of a secret in the industry. A lot of people are a little bit intimidated about the whole process because you do have to pay other fees, additional fees to these brands. But we found that they're a great value. So again, I think what we have here is the ability to bring these branded projects to a different crowd, people that don't normally get access to these. I mean, obviously, we only work to accredit with accredited investors. We're doing a 506c offering, but even so, it's not about money. Many times, it's just about access. And what we've seen in the past is that these great projects get financed very quickly with just a few calls because they know, they have the experience in investing in these kind of projects, and they get sold out quickly. And then everybody else just kind of has to come in and buy the residences and that sort of thing. But with the DigiShares integration, the tokenization, we now have the ability to bring this type of project to a broader audience, and that's what really excites us about this. And we're very grateful to DigiShares because they allowed us to integrate very quickly to put this on the blockchain and have us focus on the real estate side instead of going crazy with the IT, which was my first experience was back in 2022. We actually spent a lot of money, and I'm talking a lot of money, in trying to come out with our own solution that was always behind the curve on the tech, and it just completely put us sideways. So thankful to DigiShares for allowing us to focus on what we do best, which is branded luxury real estate, and have them do the whole tokenization and IT part. So it's been a great experience, and we're very happy to be working with you guys.
Awesome. And Oscar, will there be secondary trading on your platform as well, or solely focused right now on primary market exposure?
Yes, there absolutely will be secondary trading. So all our tokens have to wait, under Rule 144, 1 year to be eligible for free trading. But we're also going to be after the placement of the token, which is a $25 million offering. So we expect to be 3-4 months in the fundraising. Then we'll more than likely file a Reg A to register the shares. So we'll look to bring liquidity sooner than later. But I think yes, and we're counting on DigiShares for the marketplace. By the way, we don't intend to build it at all. So yes, I think it's an important part of our complete ecosystem, which is not just the initial token sale and the monthly payments on the rental income, but eventually also be able to give liquidity to our investors on a secondary market.
Got it. And can you shine a little bit more light on the 35% Bitcoin treasury? I guess maybe a little bit more about why you
Yes.
decided to do this. And second, is that more so like a guardrail to preserve essentially,
Great
you know,
question, Jason.
yeah,
Yes. So
value.
look, we think that there's going to be high net worth individuals are realizing that there's a fiat debasement strategy going on. We think we see how much new liquidity is being pumped into the market by the Fed, and not just the Fed, just worldwide central banks, to try to prevent what's inevitably going to be, a recession at one point or another. But moreover, I think they're using it to create inflation so that they can liquefy the debt that we're all, buried into. And that's why we're big believers in Bitcoin. I'm not a Bitcoin fundamentalist or any other sort, but I think I realize that Bitcoin, like real estate, like gold, is just one of those assets that investors that are fiat is going to be devalued against, basically. And obviously, you see the Trump administration not just passing laws and resolutions to support this. You see the family actually investing big time in Bitcoin. So what we thought of was a Bitcoin, let's just say treasury strategy, 35%, just to give it some asymmetrical returns, but with a real estate component to it, so we can that will give you dividends on a monthly basis and a more stable return as well, right? So so I would say that this first offering was based on that whole idea of the fiat debasement strategy or the fiat debasement trade, and I think we feel we feel it's a very 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 real situation, and we thought we can offer to our investors something that they would like and could bring something different to the market as well.
Very interesting. And it's, examples like this which get me excited too for the space, right? The fact that not just real estate is getting tokenized, but all asset classes are going to come on chain. And you're going to start seeing some portfolio construction that's going to have part crypto, part public equity, part private asset. and you can really get customized portfolios for yourself as an investor, as well as, even in fund structures to more easily have interesting strategies for optimized deals depending on risk or how much risk you want to take on, right? So this is exciting stuff, and it's just the beginning of where tokenization is really going to take us from an asset management perspective. With that, a quick reminder for anyone in the audience that's submitting questions, please use the Q&A function at the bottom rather than the chat. And that way we have all the questions in one spot rather than them kind of getting lost in the chat there. But with that, we're going to turn it over to Randy Goldberg from Land Invest. Randy, take it away.
Thank you. I really appreciate it, Jason. So first off, I want to thank DigiShares and Claus for this invitation. Truly honored to be here. My name's Randy Goldberg, and I'm the founder and CEO of landinvest.io. We've built the first fully compliant blockchain-based ecosystem focused solely on U.S. vacant land. At the center is our property security token, which provides true fractional equity ownership in Land Invest Corp. Yes, a little bit different. We tokenize the entire company. It's regulated on-chain equity in a real US operating company. We're offering real assets, real revenue, and real ownership. So for more than 2 years, well before launching this STO, we've been actively buying properties through tax defaulted auctions across the US. These auctions let us find undervalued parcels that most buyers never see, and often long before they even hit the open market. Over time, we've built a reliable, repeatable process for spotting good opportunities, evaluating them quickly, and acquiring land that provides for strong disposition net margins, historically well north of 40%. This hands-on experience has already led to hundreds of successful deals, giving us a proven, repeatable blueprint for success. Our nationwide buy strategy will power our pipeline and feed the real land assets behind the property token. We also own buyvacantland.com, which is our new online land directory, real marquee, that will redefine how buyers, investors, and developers source land across the US. While our core acquisition strategy will come from tax defaulted auctions nationwide, buyvacantland.com will be used to showcase inventory, build a broader retail audience, attract new buyers, and create additional resale channels for the company Land Invest as a whole. It also strengthens our brand presence in the US land ecosystem. It'll also help us generate organic deal flow and give us customer-facing platform that supports the overall Land Invest pipeline. By the way, our model isn't just theoretical. Prior to launch, we completed our first land disposition in the state of California. One of the parcels I personally seeded the company with sold for more than 5x return. And we have a second one under contract as of today. We just launched our phase one seed round literally today, opening the first tranche of property equity tokens to US accredited as well as non-US investors. We're rolling out 3 distinct seed rounds and full dilution up front so as not to freak out any investors. But obviously, those investors that get in early will have the most potential appreciated value in their actual security. We're also going to be offering quarterly distributions via USDC. This is on 100% of our net margins. There's no holdback after expenses. It's 100% of net margins will be distributed pro rata to all token holders. We built a rigorous regulatory and technical framework with help from DigiShares and their amazing team. I cannot say enough about the company that Claus has created and the people he has that are part of this company. They truly are the leaders in the space. And I've looked at every single STO platform, and DigiShares, bar none, is the leader in the space. Together, we set up the following: full Reg D, 506C, and Reg S compliance, full KYC and AML checks via SumSub, US accredited investor verification via verifyinvestor.com, a fully permissioned ERC 1404 security token framework with the eventual evolution to the new 7943, a compliant investor onboarding workflow, a fully automated subscription and investment process via their deal room and platform, fully integrated cap tables and shareholder management, full wallet level compliance and monitoring, and lastly, automated quarterly USDC distribution systems, all within DigiShares platform. Another great thing, we also created a gated investor Discord community. So there's a forward-facing portion to the Discord for prospects, and also a gated wallet collab verified section for reporting, financials, operational updates, and governance. We wanted a community atmosphere that provided 100% transparency into our daily operations and flow. So one of the questions, Jason, that you asked was, how do we see the state of tokenization in the US, since that's what this webinar is about? And I can tell you that the US market is clearly shifting into its next phase, definitely driven by real assets, real returns, and real regulatory clarity. I'm sure most retail investors are tired of the up and down of the big whales taking us all for rides. Investors are no longer looking for hype. They're looking for audited, transparent, cash flow producing opportunities that can scale responsibly. We're seeing institutional allocators move towards RWAs and STOs that have proven business models, verifiable performance, and strong governance behind them. That's truly where we're positioned, and that's why we decided on the STO track. Our focus on acquiring and reselling land at strong net margins, our proven 2-year track record, and our commitment to full US compliance give investors exposure to real value, not just speculation. So truly, in a market full of noise, delivering consistent, measurable results is what truly sets us apart and protects our community for the long run. Our short-term goals are really simple. Scale land acquisitions. By the way, my daddy always taught me about the KISS principle, which is keep it simple, stupid. Scale land acquisitions nationwide, execute hundreds of land transactions, accelerate dispositions to realize net margins for our token holders, close out our phase 1 seed round, expand and engage our investor community worldwide, and truly generate real-world results that drive both token value and token holder returns. And most importantly, prepare for secondary markets and liquidity. Our long-term goals. We really want to build the largest tax-defaulted land acquisition engine in the US, achieve consistent, repeatable net margin performance at scale, develop a truly national land disposition network, and grow the property token into a flagship RWA token. We want to integrate with multiple regulatory secondary trading platforms such as Real Estate.Exchange and others. We want to expand into development-ready land and value-add strategies. But most importantly, we want to build a vertically integrated RWA ecosystem. We're going to continue developing buyvacantland.com to create a fully integrated pipeline of acquisition, compliance tokenization, resale, and secondary liquidity within one unified ecosystem. So I'll leave you with this. Our commitment truly is simple. Find great land, create real value, and share that value with our token holders. No hype, no mystery, just a model that works. For nearly 2 years, we've proven this strategy in the real world, parcel by parcel, deal by deal. We've built a compliant, secure foundation that puts investors first, and now we have the infrastructure, thanks to DigiShares, to scale faster and smarter than ever before. And truly, your involvement, DigiShares, and the entire industry is what makes this possible. Together, we're not just buying land, we're building the future of land investing, and our motto is one token at a time. That's it.
Fantastic. Thank you so much. Well, I'd like to invite Claus back on as well, along with Oscar and Ryan, as we kind of shift into the panel portion of this webinar. Once again, if you are submitting questions, please use the Q&A function rather than the chat, just to make sure we're staying organized here with the questions that come in. Before we move on, Randy, overall, you're an issuer, right? Congratulations, you're going live here on your issuance. Tell us a little bit about, since this is a conversation of the state of tokenization in the U.S., tell us a little bit about how you perceive maybe the compliance part of it. Did you think it was rather clear and you're following traditional securities laws, or are there things that you think that should be a little bit more clear that are not already that you have to maneuver around? What was your experience like as an issuer?
When I decided, so I've been following STO literally since 2017, and I've been in crypto for a long time. Uh, uh, when I decided to take this business and scale it via tokenization, I was deciding, should I take the DeFi utility RWA path, or should I take the really hard STO path? Because in the US, the goal is to protect retail investors, obviously, and that's why the compliance uh, avenues is difficult. It's not easy. It's really the hard road. But I can tell you, I'm really not in it to run the race. We're in it for the marathon, and I think that uh, first starting with the STO path uh, really provides us for that institutional path of full compliance and transparency. You know, um, and it has not been easy. It's been 3 months of a constant slog, diving deep into 60-page private placement memorandums, geofencing our website, uh, all the different SEC compliance aspects from blue sky statements to high-priced attorneys charging us to go over every line item of our subscription agreement. And it's a little scary because you have documents that might scare retail investors away and make them exit or abandon before they invest. But I can tell you, I truly, now that I've gone through it, believe it's the right path, because in 2026, the market, which will be led by the US, will be STO under the RWA umbrella. So I think there will be a framework where both DeFi RWAs and STO RWAs will cohabitate and have symbiotic relationships. But I can tell you the US, as always, will end up being the leaders in the space with fully compliant STO regs. And I think investors are going to be happy because really what we're selling is real. It's a real asset. It's real ownership, legal real ownership, not vaporware or pretend ownership via DeFi utility. And at the end of the day, it's it's the track that we chose, and I'm happy we did.
Awesome. And this kind of goes hand in hand with Jose's question here in the Q&A of knowing, what the underlying legal structure is that supports that ownership for the token owners, right? Is it, you mentioned a subscription agreement, Randy. So others do trusts and SPVs and stuff like that. Oscar, you're also an issuer. What's your structure and how are you ensuring that token owners, have that ownership and legal backing?
Absolutely. So a lot of what Randy has said completely resonates. I do agree that investors are going to be looking for real world assets, real cash flow from real operators, people that have real track record in whatever they're offering. It is like Randy said a little bit, intimidating, all these documentations and everything you have to go through. And from the investor point of view, it may be also more intimidating. But I think investors will more and more get used to it. They'll just realize this is part of the game and that it's for their protection. Obviously, you can make it as simple as possible. DigiShares does that with, some sub and investor accreditation integrations, so that a lot of that more cumbersome processes are getting done by automatically. There's still some work to do. Eventually we'll probably find a better legal framework, a better compliance legal framework for these long documents. But for now, we're very comfortable in that, right? I mean, they are costly, but they do protect investors. And I think, like Randy was mentioning, it's going to be a huge wave to this sort of asset. Investors don't want to just. I think Bitcoin We can argue whether it's going to last, or it's going to go up to 1 million or anything else. But what nobody will argue is that it was the first asset. It was kind of the introduction. Think of it as like the Yahoo in the 1990s. So everybody got into crypto because of Bitcoin, and whether they stay or not, it definitely roused. It's rising attention now at an institutional level, and now people are starting to think at a deep, think around tokens or crypto in a deeper sense, and they're realizing that there's some great opportunities out there that before were not available. Right? I mean, for us in particular, when we were lucky enough to do two great branded projects in London. We didn't have the chance to, we didn't need to, and or nor had the chance to go to accredited investors on a crowd funded basis. We basically made some few calls. Let's say we made 100 calls, and we had interest from 20 or 30 right away, and we closed with two or three, immediately. And that's what I think. And frankly, as a developer, obviously, when you're dealing with bigger, family offices or institutions, the negotiation is much more difficult. You obviously don't get the sort of, they get all the upside. It doesn't really leave a lot more for the developer. But here, I think it gives developers a fairer shot at distributing profits while giving accredited investors a much higher return than they ever imagine having access to. Your accredited investor, typical accredited investor, are professionals, senior VPs of companies, doctors, lawyers. They spend their times doing something else, and don't have the time to dig through and create the relationships that give them access to this sort of very high RR project, right? We're estimating, and even though we're actually a blended product, and we're going to be buying some product, some part of our proceeds are going to go to buying stabilized properties that will generate 7-8%. Then we're going to do some value added, which would be probably a little 12-14%, and a portion of it, up to a third, we'll do some ground up new development, and that's going to give them a blend that we're aiming at a 17 to 20% IRR on the real estate side. That's incredible access. That's incredible returns for accredited investors usually. But we've generated 40, 50, 60% of some of our projects, and they usually go to the bigger investors. And now we're in a position where we can share this a little bit more with the crowd. So we do see that this is going to explode. People are going to catch on what's being done, and it'll be like always. They'll chase the experienced developers, the experienced operators, people like Randy that have created incredible value through years of experience. Groups like ours, which humbly we say we sort of, I'm not going to say we invented, but we definitely with the Bulgari London Hotel, we put us on a map on what branded experiences, branded projects really do. And again, people are gonna, they're gonna start realizing what we're doing, and they're gonna be comfortable to invest. And I think it's gonna explode. And I believe we're in that inflection point, right at that point where it's just gonna just absolutely take off. 26, 27, I think, are gonna be fabulous years for anybody that's establishing themselves in this industry.
Fantastic. Love that. Shifting away maybe from the compliance obviously is very much key, but there's other factors to tokenization as well, like liquidity and infrastructure that supports this, maybe on-chain data, and I want to dive into all of that too. But Gary here in the Q&A is asking something along the lines of, until there's really an active secondary trading market for these asset-backed tokens, it seems like a lot of this is more talk about automating manual processes, maybe investor onboarding and management. But curious to get your guys' thoughts on maybe what's going to catalyze some more secondary market trading activity for this space over time. What is it that's going to bring people to be a little bit more active? And that's really for anyone.
And I could kind of kick it off, right? So prior to joining, Aptos, I was working for T0. So, similar to, Real Estate Exchange, right? And some of their partners, we had an alternative trading system, right? So we would facilitate the secondary trading of these products. So yeah, there's a couple of different sort of factors from the tokenized security standpoint, right? Some of the issues are liquidities, largely siloed, ATS to ATS, right? There's not best execution, among a lot of these sort of alternative trading systems. And then sort of, stepping back, when you think about like the construct of, putting a security on chain, it's still security at the end of the day, right? And there's different considerations from a regulatory perspective of how that security can be transacted. A lot of what we're seeing from a layer one perspective, and again, it's much more of a broader kind of step back approach, is products, right, that are securities, commodities that kind of want to trade in a more decentralized, right, DeFi manner. And then, that just can't really occur, right, with the current set of regulations. But when you look at sort of what, Claus has created with, real estate exchange and DigiShares, and then sort of, creating flexibility around sort of cadence of liquidity and sort of what liquidity could look like for tokenized security. I think that's a great first step. And then, the great thing about, I think, the environment over the past, 5 or 6 years, it's really shifted to, less of a sell on tokenization and more of a discussion around what types of, regulatory changes, need to take place, and like what are some of the considerations for allowing these, private, typically illiquid, high barrier entry securities, right, to trade in a more like, public-like manner. And then now it's the discussion of how do we make it more of a, DeFi-like product. So, those are some of, my thoughts kind of on the liquidity side. Like there are, regulatory considerations that, may need to change, right, in order to facilitate ease of access, right, globally. And then two, there, should hopefully be some more interconnectivity that exists, right, between these siloed pools of, liquidity going forward. And then look, there's always the educational effort of having both investors and issuers know that secondary liquidity is an option, right, for these typically illiquid, high barrier to entry products.
Appreciate that, Ryan. And liquidity comes in many forms, by the way, everyone. It's not just the trading, although that's obviously a good one to go with, of course. But there's also the fact that maybe you have a collateralized loan against your real estate position. And this is almost, or not almost, this is where risk also starts coming into question, right? It's how do you assess a tokenized asset versus a non-tokenized if there are new risks being introduced, if any, right? But then you have the DeFi component as well. Maybe you have a vault that you can, if maybe you can collateralize any given real estate asset above a certain rating, and maybe you can, take a loan against that. That's a form of liquidity, right? And you still can keep your exposure to that asset, right? Because you're not selling it. Just yeah, right. So there's something there to add on there. On that note, another question that came in, I think this one's specifically for Klaus, would be, will there be any integrations with regulated ATSs or MTFs such as T0, INX, RChex, SDX? Klaus, anything there? I know real estate exchange obviously is its own also
Yeah,
marketplace too.
yeah, for sure. I'm sorry if you hear a dog barking in the background. Yeah, so we actually integrated with T0 a few years ago, and that integration still works, I think. So we can definitely list on T0. We are open to discussing with any of the exchanges to list and to make the listing function right. One thing that will help in that direction is the new standard ERC 7943. If that is adopted more widely in the community and in the ecosystem, then of course listing will become so much easier. But generally, I would say if they are on an EVM chain and we are also on an EVM chain, it's generally quite easy. And of course, we are also integrating like Aptos. I know that some of the exchanges are also supporting Aptos, so that can also function. So we'll definitely support it.
Fantastic. There's generally some questions kind of varying between them, but I think the overall sentiment around some of these questions are, what kinds of, and I think we can shift back to the real estate specific portion of this, right? What types of real estate? Is it multifamily? Is it commercial? Is it whatever, what were you guys seeing being mostly tokenized in the space aside from what you guys are doing yourselves, of course?
I,
Well, I
I
think,
can
go ahead, Randy, please.
So first and foremost, before I answer that, to add on to Klaus, talking about T0 and verifyinginvestor.com, they had a great announcement a week or two ago regarding the launch of their soulbound token, which is the on-chain pass, which is I'm a big champion of that because I'm very afraid of spending marketing dollars to market to try and reach accredited U.S. investors because it's a real heavy lift when you have somebody who wants to invest to ask them to cough up more than once pages of documents to verify that they're actually an accredited investor. And having verifyinvestor.com as a partner, Klaus, a very smart move because their new on-chain pass, if it's able to become integrated and adopted across the space, it'll allow accredited investors to carry that token with them and automatically be recognized as accredited. So if somebody comes to us as a US accredited investor, they don't need to, uh, in quotes, undress again, so to speak. They actually just show up as accredited. And sorry to interrupt, Oscar. I think that from a real estate perspective, I think every product within the real estate ecosystem can be tokenized as long as there's a verifiable return, whether it be on a debt token, i.e., rental or Airbnb income, or via an equity token such as ours, where we're providing a percentage of net margins. I just think the story needs to be palatable to retail investors. Remember, if we're trying to market to current educated crypto investors, most of these investors worldwide, they've been brainwashed to believe that they need to roll the dice at the DeFi crypto casino. So it's very hard to train them or educate them that, hey, take some of those chips off the table and invest in something real. And so that's going to take in 2026 a lot of education and starting from the top down. Look, all the big boys are jumping on board and they're dictating the message and flowing down to us smaller players. So I think 2026 is going to be a tidal wave. It's going to be monumental shifts with regards to retail investors, both accredited and worldwide, Reg D and Reg S and other reg. And we're going to see people jumping on board, dipping their toes in to some of the early adoption uh, tokenized assets, such as real estate, which I think is going to lead the charge.
Well, to follow through, Randy, I think the investor community, especially in the US, tends to be very sophisticated. And right now, there are not a lot of options. So I think a bit to your point is that what we'll see is more segmented real estate offerings, right? I mean, specialized strategies. Like if you want to buy land because you understand the risk reward of land, then you have a site that focuses on that. If your appetite is more along the lines of multifamily or single family housing, then you go to those specialized operators. In our case, we're specialized operators in branded luxury, and that's what we're going to look to attract, right? And right now, again, it's just kind of like broadening out. First of all, it was kind of like and everything for everyone. You have tons of offerings, different type of segment offerings in a lot of real estate sites. But it's gonna evolve to where it is in the real world, right? I mean, right now you have we're just putting what a lot of people have been doing in the real world on chain. But it's always been in the real estate industry where you have specialists in separate segments, and you have specialized investors as well because they understand particular risks. So I think that's where we're going to be seeing the real estate tokenization industry evolve into is more segmented players. So as it broadens out, as it becomes bigger, people are going to want to look for more particular opportunities, and I think that's where the opportunity is. Just specialize in what you do and put that on the chain.
Makes sense. There's
Yeah.
a different. Go ahead, Ryan.
No, no, Jason, I was going to kind of add to that perspective and just kind of step back. And then what we've seen, right, from again, a layer one perspective is, in the US, a lot of like larger institutions are, tokenizing products that they're familiar with, right? So, you look at BlackRock, right? They're offering a tokenized money market fund called Biddle. You take a look at Franklin Templeton, right? They've also tokenized a money market fund called Benji. And then each of those respective firms, right, are looking at other jurisdictions and how they can offer similar products outside of the US. There's different private credit fund offerings as well that are being done by institutions. And then you see a lot of very innovative concepts coming out of, JP Morgan, Citi, and others, right, as they, take a deeper dive into tokenization and then, regulated partners and tech providers like DigiShares and others, are, offering a real comprehensive set of solutions to address, what are private securities and, real estate assets. So I think it's a really, interesting time from a US perspective where, to Randy's earlier point, we are sort of leading from a regulatory standpoint, right? Clarity Act, Genius Act, et cetera. And then a lot of my time, over the past 6 months have been spent in other jurisdictions where they're keenly interested in sort of stablecoin issuances, tokenizing assets, tokenized deposits. Uh, I think a little less of a focus on like CBDC, right? And then I think it's more like, yeah, how do we actually get more regulated products on chain in the, a proper manner, right? To, create that level of compliance, right? KYC, AML that, needs to take place, globally. So yeah, super, super exciting times.
Glad you brought that up, Ryan. No, absolutely. Beyond the debt and equity in a piece of real estate, there's all alternative financing in there. There's HELOC securitizations that we've seen as well. So, we mentioned earlier that a lot of different aspects will come on chain, as well as, by the way, deed and title alone, also being a big push that's coming on chain as well. So lots going on there. Ryan, you're more so from an infrastructure perspective. It's kind of your, rather than an issuer, since you've T0 and now Aptos, right? You guys are building kind of the rails here to support this. What do you think is maybe like either the most crucial part of infrastructure that's still missing, or what's the biggest piece that's the most challenging to change to be able to support on-chain assets?
Yeah, yeah, definitely. I mean, there's been a lot of improvements over the past 5 years. I think wallet infrastructure has gotten a lot better, right? Key management, custodians have, sort of emerged, and even, traditional players have kind of, fit that use case. The thing is, if you look at like the White House Digital Asset Report, right, that was issued earlier this year, it kind of outlines the overall, I would say, like goals or potential goals, right, of the administration going forward, right? The evolving role of regulated counterparties, how, securities can be sort of transacted. What does a transfer agent or custodian potentially do in the future? Each of those individual aspects, right, will take its own, Genius Act, Clarity Act going forward. So I think that's, one of the things that, it's sort of slowing down the process, right, of like taking these like TradFi products that need to be handled in a, in a certain manner, right, and then making them more DeFi native, right? Where, Jason, to your earlier point, right, sort of having, sort of lending protocols, right? The ability to like, you know, transact, borrow, etc. So, if we truly want to get into that on-chain, like I would say fully on-chain, fully decentralized, global, et cetera, right? There's a lot of regulatory considerations that, you know, need to change. And then it's also, look, there's a difference between the mindset of someone who's very DeFi native and then has been in more like traditional finance, right? I kind of mentioned, custody and custodians. I think that's like a big difference when you think of like someone who's DeFi native, who's, fine with having their own, you know, custodial wallet, like non-custodial wallet, right? Or, holding like a bearer instrument, whereas like someone in like a traditional finance perspective would be like, no, that's crazy. Like, why would I want to, kind of hold the keys to like my wallet and have like it, my assets there. So, there are these divides, and I think you're gonna have this like synthesis that we're already seeing between sort of DeFi and TradFi, where, you know, you're utilizing sort of on-chain rails to do traditional processes, and then ultimately, and I've been on a couple of panels before with other like institutional groups. I think tokenization as a concept becomes less of a thing in the future because it's just how the rails are being done, right? So people aren't necessarily thinking of it. So, look, I think regulations need to continue to, move forward to allow for more sort of on-chain functionality. And then I think that things become a bit more seamless where people aren't necessarily thinking something's done on chain and, it happens to actually be on sort of blockchain rails.
Yeah, absolutely. The more Web 2 front end that you can make it, the better, right? For the user experience, which makes sense. But you're right, wallet infrastructure alone is something that's important because, when you start thinking about maybe wealth management, where, as an example, you have a financial advisor that wants to allocate, into tokenized assets on behalf of their clients. Well, who has the control of those assets to be able to sign that transaction? And does the client need to do that, or is it internally within the bank? Those are all things that we have some time to figure out, and it's just one example of a piece of infrastructure, right, that people need to figure out, and it'll benefit those that are issuers that are looking to receive, but you also have to have that compatible with whatever legacy systems are in place.
Yeah, and it feels solvable, right? It's just, you kind of need similar to like stablecoin issuance, right? You need the guardrails around it so that people feel comfortable and then sort of know what a playbook looks like going forward.
Yeah, exactly. So there's I'm sure solutions being built left and right for sure. And with that, there's another kind of theme emerging, I guess, in the question set here, which is around accreditation. I think Randy or Oscar brought that up earlier. But maybe if someone can quickly give us a quick overview of like what is accredited investor, what are the limitations, and the real question I think is, how is that limiting, whether it's liquidity or just retail access? And what could we hope, will change in the accredited space to involve more people? But anyone that wants to jump in.
Well, if nobody's going to jump in, I can start. So, I really came at this as just a dumb land guy. I just buy and sell land. And, from a layman's perspective, I saw I don't know if it was Gary or George or somebody, and they said, well, look, you're not reinventing the wheel, until there's liquidity markets, really, there's nothing new here. And I really strongly disagree. We're able to actually legally tokenize and democratize the investment. So it allows people from anywhere in the world to invest in US vacant land or Oscar's product or anybody else's tokenized product. So that alone, being able to democratize the investments is amazing. It's revolutionary. From an accredited investor perspective, so Reg D 506C, there's a 1 year lockup. So, going back to what I was saying, by making it easier for accredited investors to invest and not constantly needing to undress, I think is going to be a monumental shift. And I know that's coming. I'm sure there's going to be more than just the soul-bound token. There's going to be a bunch of competition in the US that's going to make it easier. I'm sure there's going to be a lot of regulatory clarity coming out of the government, especially this administration, that will make it easier for accredited investors to invest. Um, for investors outside of the US, there really is no lockup period under Reg S. So for liquidity marketplaces that are ready for prime time, we want to join immediately. We want to make it easy for non-US investors to be able to access, trade, sell, and have those illiquid become liquid. Because at the end of the day, the average person, Joe Schmo from Sydney, Australia, if he instant gratification invests his $1,000 in our land product, makes a return, but wow, some unforeseen event, he needs that money and he needs liquidity. We need to give him that option to be able to off ramp, and I think that's really important. And that's, to me, going back to Ryan's answers, I think that's the most paramount aspect to this whole tokenization process in 2026. And Klaus's collaboration for the 7943 by being able to have a streamlined off-ramp liquidity mechanism for the layman investor. Forget about institutional investors. They're not going anywhere and they're going to own the space. But for me, the $1,000 minimum investor, we're going to try and provide them with the best possible returns and give them every reason to buy more, not wanting to look for the liquidity market. But I think it's important that it's there en masse. So that's my opinion.
Yeah, now there's been talk maybe of like an accredited investor test or whatnot, for more people to be able to qualify. Which for anyone that's not aware, basically what accreditation is for the US is, you either or have a net worth up to I think $1 million, not including your primary residence, or you have a certain income, like I think it's 250K if you're single. 350 if married. And then the only other exception to that is if you, for example, have a Series 7, which is a or SA or other licenses, right, from FINRA, that is, for lack of a better word, kind of constrained to a certain subset of people, basically in the financial space. So, if there would be a way to expand what accredited investor means, that would be great to open it up. But otherwise, I think your other options for anyone that's looking to access retail investors, aka non-accredited, would be maybe your Reg CF or Reg A options that are a little bit more heavy on the disclosure side and whatnot. But of course, not a lawyer, and obviously seek your own legal advice if you want to pursue those. So we'll see what things look like there as things evolve. But with that, along the same lines is the question of demand and where the buy side is coming. So, maybe Klaus, you can kick it off. Where are you guys finding investors kind of coming from to the DigiShares platform or any of your issuer clients, that use DigiShares? And is there anything that, you guys could do maybe to help also on just distribution side, whether it's partnerships or others in this space that are kind of also dabbling there?
Yeah, so we are not licensed as a broker dealer, and we are not allowed, of course, to solicit any securities on behalf of our clients. So we generally we're very restricted in what we can do, but we have a long list, quite long list of partners we can refer to who can step in and help, both on the institutional side, the accredited investor side, but also on the retail side, depending on the type of raise. So I think that there's an ecosystem developing right now for the buy side. Actually, we had a similar webinar just a month ago or a few weeks ago, just focused on the buy side development, with I think 5 or 6 or 7 of our ecosystem partners presenting their capabilities, right, and a good number of those were in the US. So I think it's starting to come.
Thank you. Yeah, that's just going to be honestly, I think that another misconception in this space, by the way, is from issuer perspective, is people think that they can just tokenize an asset and it's a magic wand and investors will show up, and can tell you it's not. At the end of the day, I would always tell an issuer, at least from our consulting side, I would always say, it's up to you. You are selling your own asset at the end of the day. That's the underlying. And hopefully you have an investor base. And if you don't, like DigiShares, like Klaus mentioned, there are partners in the space that could potentially help from a broker-dealer side, private placement agent side. So all options. But of course, it's always evolving, and education is always going to end up being key on this end here. Randy, Oscar, Ryan, was there anything you guys would like to add to that, or we get to move on?
Well, just real quick thought. So Claus was kind enough to introduce us to Growth Turbine. They've done a great job on STOs. They've raised probably over $400 million in the last few years. So they could probably, we could probably call them one of the industry leaders. So because we didn't know anything about that, and we realized early on it would be a challenge, we're actually going on 2 paths. We just launched last week, so I can't tell you if any actually, what's actually working. But we did start out with Growth Turbine. We set out a great plan that we're going to be launching this week, in fact. And what they bring different to the table is that they've created a curated list of STO investors. So, they don't just do your typical advertising strategy, which is fantastic, with great, follow up on the data and analytics and all that. But they actually have investors that they put you on calls with. And as a backup plan or as a parallel plan, we're signing on to a private placement agent, Jason, like you mentioned, because we just don't know what's going to get us there. But we're determined to finalize a raise. I think it's very important for the platform and for what we're doing that we're successful in the raise initially. So until we really learn what the path is, we're using a couple of different strategies.
Oscar, last on the last webinar that Klaus was talking about, there was a very interesting company called Castle Placement out of your neck of the woods, New York, and
Sure, no.
Richard Luftig was on the panel, and they created a product called CP Go, which you can log in, create an account, and I was playing around with it prior to our launch, and you can access, they provide credits, and I assume you can buy credits, and you can access very specific accredited investor bases based on family offices, VCs. Really, really cool. I think for us, Jason, we have a little bit of a distinct advantage um, because of our high net margin potential returns. We can actually tell a very different story to educated crypto DeFi investors. So we're also able to travel in the crypto marketing or advertising space. So we're going to go after educated crypto investors, even Gen Zers outside of the US, because I highly doubt too many of them are going to be considered accredited in the US. But we think we can bring on a lot of those DeFi investors and get them to pull some of their um, pump fund tokens out of the market and invest in real assets so that they can hedge against uh, probable losses in the DeFi space. But yeah, Klaus, I'd love an introduction to Growth Turbine as well. We want to throw everything but the kitchen sink to be able to bring investors into the fold. Thanks, Klaus.
Fantastic. That's what it's all about. We're learning together here on all the different resources building the space. Personally, a fan of Castle Placement as well, so it's a good one.
Thank you, Randy. Bring it up. I will reach out to them.
Good stuff. All righty, guys. Well, I want to say we have maybe 15 minutes left-ish to go, although we do have some good questions coming in here, so we'll just keep trucking along with our audience here. And audience, thank you for being so engaged. It's great to see so much, actual interest in this space, this growing space for sure. So with that, let's just see. Someone is asking about maybe like the structure of the offering, right? Are you guys seeing it? I'm going to guess that you guys are more so on the fractional tokens that are fungible, buy and sell type situation versus maybe a single NFT that represents a fixed investment position. Maybe it's debt or maybe it's like an actual full property. What kind of benefits are you guys seeing for holders in one model versus another, fungible tokens versus NFTs, and whatnot? And I think, and the other thing to add from that question would be that the assumption here, the consideration is the fact that infrastructure investing is usually more long-term rather than speculative.
That from COVID, there's such a bad taste in the word NFT for retail investors that it scares people. Again, coming from the dumb land guy perspective, not the fully tech guy, um, we truly just want to offer shares. As if you're going on to E-Trade and buying your shares in Apple. We just want to give people a really easy way to buy into an equity product that provides a fair return or even a great return, and also provides some type of appreciated value in the actual underlying token. The security token offering for us, because we're based in the US, really is the best vehicle, fully compliant, transparent, uh, and fully backed by equity and assets, giving people around the world a taste of what it's like to invest in America. And for us, the best asset in the world, which they're not making more of, which is land. I hate the word NFT, and I was an early investor in some great NFT projects during COVID. But I can tell you, for me, NFTs are dead, and the word NFT is scary.
I agree.
So yeah, I like the word token, and I even like the word security token better because the word security to me is awesome.
NFTs really have nothing to do with tokenization, or not very much, at the least, I would say. So an NFT is used if you want to represent an entire asset with a single NFT, right? So you're not fractionalizing in any way. If you want to fractionalize, you cannot. NFTs don't really make sense. They don't have a role to play. You can still, if you want to have extra work, which is unnecessary, but if you want to, you can represent the entire asset, title deed, whatever, with an NFT, and then you can fractionalize the NFT with security tokens. But there's no real need to do it. So I share your views.
Yeah, and we've seen so coming from like a layer one perspective again, like we've seen like NFT use cases, right? Obviously outside of this security world, right, where it's more of a social element. There's different sort of media partners that we have that are looking to kind of expand upon sort of NFT use cases. The artwork one is always one that's like very interesting, sort of again, outside of sort of the securities and commodity space. So yeah, it's interesting, right? And then you have, the concept of like a token launch, right? Which kind of falls outside of the purview, of securities law. So yeah, different types of products that are, out there to, address different use cases. I think, the level of maturity that, we've seen, um, kind of like evolve over the past 5 years where, people are doing securities races again, are looking for a security token offering, identifying the proper sort of regulated, and technology partners to do so, working with good law firms, right, to actually, structure that security token offering in a way is something that, we're all big believers in. And then, on the NFT component, there's probably a place for NFTs, for different social elements, other types of products that, may not necessarily kind of fall within the same like, category as like a, true security token offering.
Absolutely. Could be a a variety of things, right? It's a lot you mentioned, for example, a social element, right? And I love that because well, security tokens on their own already can. It's your way of verifying exactly who is your investors on your cap table at any given time. And so you can just prove that you're an investor there, but maybe it's you give an NFT to people that did your seed round and they get some extra perks, especially if it's a piece of, let's say, I don't know, a hotel. Maybe it's discounted nights, maybe it's a free bottle of wine, as we've seen demonstrated by the St. Regis, right? The property that's, stood the test of time in real estate
Yeah.
tokenization.
And Jason, to that point, right, the St. Regis, was tokenized and traded on T0's alternative trading system. So there was a lot of like interesting concepts that came out of that. Of course, to your point, right, they had an ownership benefit program. They would tie it to different things. And then, look, I've had a number of discussions with hospitality owners that are really looking to create like a differentiated loyalty program, right? Where, maybe there's a security component, maybe there's like an NFT sort of loyalty component. And then how do we, get this stickier and customer to potentially become an investor and then, vice versa. So I think there's going to be a ton of like very innovative things that come out of this like melding of user, investor. And look, I think the next, 1, 3, 5, 10+ years, with more and more being done on chain, will, again, come up with a number of like innovative social investor slash, sort of DeFi initiatives. So yeah, very, very bullish going forward.
Ryan, on your point, and Jason, on your point, one of the big words that stand out is permissioned. The permission 1404 that Klaus has offered. I mean, how many times do you open up your news feed and see somebody who's lost $80 million, some centralized exchange that got looted, or individual investors via DeFi that have been scammed out of their tokens? What's great about the permission token is even if we get hacked, or God forbid, DigiShares or any platform gets hacked, we could just kill the tokens and replace them because we have our cap table. We know who our investors are. They're not losing their investment. That is huge for the retail investor to know that they are safe and permissioned.
This is a great point. Randy, Ryan, just one other thing that you mentioned is how companies are exploring, like the Regis example you gave, where you can use tokens as rewards to bring in what would become investors. So we experimented last week issuing a meme token around MetroSpaces, which is a sister company of Travaglio, and it's all based on rewards on the Travaglio properties, right? So frankly, we don't know where it's going to go, or even if we've done it right. It wasn't really well thought out, but we just thought we'd get in there and try to hack something and figure a way out since nobody else is doing it. It's kind of like going, with a machete into on raw land and cutting through. But we came out, with some very, obvious ones, certain rewards tiers, a certain amount of tokens. After a certain amount of tokens, you get discounts at our properties, you get free nights, We're giving out naming rights for a certain amount of other tokens that you acquire. We're talking to we've reached out to Priority Pass to eventually include lounges. So just try to become a token based reward system that will wrap around our properties, right? And I think like you mentioned, one thing will lead to the other, right? So investors will become token holders, and reward holders will become token property holders. So I think it's very exciting because a lot of mistakes to be made for sure, but definitely a lot to figure out and generating a new ecosystem that people are just starting to think of.
Absolutely. These utility tokens are probably, kind of like your meme token, right? The idea is you're supporting the platform or the infrastructure that's powering these other regulated offerings, right? So maybe it's a way to like enhance your yield or boost your yield, if you will, which we've seen a little bit of in the DeFi space. Combining, the yield and lending markets with alongside an extra boost from utility token of the platform that's hosting that vault, for example. So nonetheless, I'm sure we're going to see a lot more of that for all RWA tokens or platforms. Maybe there'll be a DS token, a DigiShares token one day, or coin. But others that are building either their own chains or just utility again to really see the investor and the platform users all together and support
Yeah,
that.
but
So
Jason, you have to be, there's something there really is a caveat there. From a regulatory perspective, you have to be very careful if you're a security token offering under any reg in the US. You can't cross promote DeFi utility tokens under the same corporate structure. It's criminal. It's illegal. And there's a lot of offerings under the RWA umbrella or moniker that are breaking the law, and because they're either lazy or they're just in the middle of severe cash grabs. And I think that the SEC, look, with the STOs coming online in 2026, you know what's going to happen. A lot of these DeFi protocols, or I say scammers, are going to get involved in the STO space and try and do cash grabs. And I think the SEC is going to have to really ramp up regulatory efforts and action letters to really clean up the space, because the big boys right now, they're trying to create a narrative of a safe environment. And unfortunately, DeFi bad actors are going to come into the space and muck things up a little. But from a DeFi and STO perspective, you have to make sure that you're using separate entities that are not cross promoting together in a way that could really complicate your regulatory issues.
So everyone, please definitely do your own research. And some of these concepts are maybe while not necessarily available in the U.S., they are also available non-U.S. As other jurisdictions have other laws and what's permitted and clarity as well, or lack thereof. So for anyone watching, make sure you obviously do your own research and hire your own lawyers too. But with that, we're gonna wrap this up soon. But I do want to kind of go to maybe a little bit more of the forward-facing, future of tokenization here in the U.S. We talked earlier about how we had the Genius X Pass. We're working on clarity here. What else do you guys think is missing in the US specifically to get tokenization going a little bit harder or stronger?
Everybody's staying muted. Going back, I figure I'll chime in again as the layman. I think ease of use. I think to bring non-traditional investors, so people who invest in securities outside of those people who have wallets and have adopted crypto in the DeFi space. I think it comes down to security of their investment, full transparency, and real viable returns that you can prove. I think that's what it comes down to. And I think that's what's great about the STO model as opposed to the overreaching RWA model. In the US, the government is protecting the retail investor. And I think that's very important. And STOs are truly going to lead the way and force a lot of these RWA offerings to maybe think twice about getting involved in an STO offering as opposed, because as the retail investor gets educated and wallet adoption becomes more proliferated across the U.S. market, I think we truly are going to be the drivers of moving the equity markets first, and then all the other STO potential opportunities online. You know, Gen Zers, they want everything online. They want everything on their mobile device. And I think that being able to provide that transparent space via STOs is going to provide that. And it's coming. You can hear the tidal wave coming, and I'm sure Ryan can speak to that as a layer one. I mean, there's nothing that's going to stop this freight train.
Yeah, definitely. And look, I think one of the positive things that still has to continue to occur is people discussing it, right? Sort of media bringing it up, right? Having access to things that, again, were typically very high barrier to entry and illiquid. And then also having sort of good user interfaces, right, to allow that to occur, right? Part of the issues, like everything's very, kind of fragmented. It's difficult to differentiate between good product and bad product. But you look at like efforts on sort of larger retail brokerages, right? Robinhood, has been talking a lot about sort of tokenization of, all different types of products, right? Providing accessibility to private markets. And then this is something that, obviously Klaus, myself, and then a lot of others have, been discussing over the past, 6 or 7 years. But I think having that sort of interaction with like a larger sort of environment in the US, right? People who aren't necessarily familiar with the sort of nuances around, participating in a Reg D 506C private placement, facilitating, secondary liquidity in like a real estate offering. I think those are good. I like the concept, right, of a Reg CF and a Reg A plus offering, providing sort of that further accessibility. And this is something that I've always, thought about too. It'd be nice to have like the ability to kind of walk into your, you know, restaurant, brewery, winery, whatever it may be, have a QR code on the table, and then, even potentially participate in, a capital raise that's going on for that, particular business, right? And then for you to take, an ownership stake of, some tranche of, debt and or equity. And then that being a very sort of accessible thing where, you're working, very closely, right, alongside that type of, establishment that you like and trust. So that's where I think like the market's heading. I don't know if it'll take, 1 year, 3 years, 5 years, 10 years plus, but in an ideal world, right, we would just be discussing sort of STOs, equity ownership, et cetera, in like a more, you know, more robust manner, day to day.
Yeah, I think automating the accredited investor process would definitely go a long way, right? I mean, until we change the laws, I mean, I think accredited investor verification was set for another time and space, in the investment community. But in the meantime, if we can figure out to really automate the 506C in particular, it will go a long way. Reg Ds are obviously more expensive as far as getting them approved and everything else. It's a longer process out to the market, but also on the marketing, it's a little bit more difficult probably because it's more focused towards retail investors. But that's how it is, right? Also, retail investors will become cheaper to access on a marketing basis. So Reg A's, I think, will continue to be relevant. But I think it's the timing to market that's really intimidating for a lot of issuers. So yeah, definitely the accredited investor verification process, just making it seamless, easier, maybe more automated. I think the token idea is really great because you only have to go through that process once. But that I'm sure that'll get figured out by brighter people than me.
All exciting stuff, and I'm sure there's a lot more change to come, right? And I know there's predictions left and right for 2030 and beyond, where this market is growing, and it's, great to see it's a hyperbolic type growth, right? Because people are starting to understand this technology, institutions are starting to use it as well, and so assets will just naturally flow in on chain a little bit more, and the more people get used to it, the better, right? It's from both a user perspective and an issuer. With that, thank you all. I know there's a lot more going on here, but we're coming up on time, if you will. But I'll pass it over to Klaus for some closing thoughts. And Randy, Oscar, Ryan, thank you for joining us. Great insights as always.
Thank you, Jason. Great job, by the way.
Thank you, Jason. Yeah, I don't have much to say. We planned also for for a lawyer, organization lawyer, to be present here today. Unfortunately, she couldn't come. But I think she would have said that the regulation is actually really good for this stuff in the US compared to many other countries. The US is technology neutral, right? So tokenization. So any security transaction, whether it's done with tokenization or without it, is treated the same under the regulation, which is a great decision. So thank you to everyone for coming here today. Thanks to the speakers. Pleasure to have you here, and see you 14 days on the next webinar, perhaps.